Today, we're diving into the most critical skill that separates wealthy market operators from everyone else. The ability to catch and ride those massive fortune-making trends that come around just a few times each year. And I promise you, what you're about to discover might completely transform how you approach the markets. Have you ever watched a stock soar 300% after you sold it for a quick 10% profit? That gut-wrenching feeling of missing out on life-changing gains because you couldn't sit still long enough to let your winners run? If you're nodding right now, you're not alone. The market has a cruel way of teaching us its most expensive lessons, doesn't it? But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the globe. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Has this ever happened to you? You spot a promising setup, take a position, and as soon as you see a small profit, that voice in your head starts whispering, "Take it now before it disappears." So you sell, pocket your modest gain, and then watch in disbelief as that same stock continues climbing week after week, month after month without you. The painful truth is that most traders aren't ruined by the market. They're ruined by their own impatience. They confuse activity with achievement, mistaking constant trading for progress. But here's what the market veterans know. True wealth isn't built by catching every tiny price fluctuation. It's created by identifying those rare, powerful trends that carry prices far from their starting points and having the discipline to stay with them. Think about it. Would you rather make 50 trades that net you 2% each or catch just one 100% move? The math is simple, but the psychology required is anything but. Because staying in a position as it grows requires something most of us struggle with: the ability to do nothing when everything in your body is screaming at you to act. Stay with me until the end of this video series, because we're going to break down exactly how to recognize these massive trends before they become obvious to everyone else. You'll discover why the daily noise that consumes most traders' attention is actually preventing them from seeing the bigger, more profitable picture. What if you could train yourself to see what others miss? What if instead of being shaken out by every market correction, you could confidently hold through the inevitable pullbacks, knowing that your bigger thesis remains intact? Now, imagine for a moment what your trading account would look like if you had caught just one of the major trends of the past year and held it. Just one. Because that's all it takes to transform your results completely. The market offers these opportunities with surprising regularity, but most traders are too busy looking at the wrong things to notice them forming. If you're serious about capturing those big market swings we've been discussing, hit that subscribe button. I share these kinds of insights every single time, focusing on the psychological aspects of trading that most channels ignore. What many don't realize is that identifying a trend isn't actually the hardest part of this journey. The real transformation happens when you develop the mental fortitude to stay with that trend once you've spotted it. This revelation changed everything for me, and it's what separates those who merely participate in markets from those who truly profit from them. You see, the market constantly sends signals. It whispers its intentions through price action, volume patterns, and momentum shifts. And many traders can actually spot these signals quite well. The hidden truth, they still fail to capitalize on them because they lack the patience to let their winners fully develop. It's like planting a fruit tree and then uprooting it the moment you see the first tiny bud, rather than waiting for the abundant harvest that was just months away. This mindset shift, from seeking quick validation to embracing the natural development of market cycles, is what creates lasting wealth. But here's something even more fundamental that took me years to truly internalize. The market simply doesn't care about your opinions. It doesn't care what you think should happen or what seems logical. To you, this humbling realization is actually incredibly liberating once you accept it. I've watched countless intelligent people argue with the tape, insisting that a stock can't possibly go any higher or that a market is obviously overvalued, only to be proven wrong as prices continued their inexorable move in the exact opposite direction of their conviction. The impact of fighting the market rather than flowing with it is catastrophically expensive, both financially and emotionally. Think of the market as a powerful river. You can either struggle against the current, exhausting yourself while making minimal progress, or you can identify which way the water is flowing and position your boat accordingly. The decisions you make in these moments aren't just about this trade or that investment. They're reflections of how you navigate life's uncertainties. Now, I want to go even deeper into this topic by examining how successful operators approach these big market moves. They understand that trying to catch the exact bottom or sell at the perfect top is a fool's errand. Instead, they focus on capturing the substantial middle portion of trends, where the real money lies. They recognize that the beginning of a move is often choppy and uncertain, while the end is unpredictable and fraught with reversal risk. What they're doing, essentially, is embracing the rhythm of the market rather than imposing their expectations onto it. They're aligning themselves with forces much larger than any individual trader, and in doing so, they find themselves carried along by momentum that others miss entirely because they're too busy second-guessing every fluctuation. If you're finding yourself nodding along with what I'm saying, write "the tape never lies" in the comments section. It's a phrase that might just save you from countless expensive arguments with the market in your trading journey. This philosophy of trend following reveals one of the most profound revelations in market strategy. The obsession with buying at the absolute bottom or selling at the perfect top is actually a gambler's fantasy, not an investor's wisdom. I've seen this destructive mindset create more financial scars than profits for even the most talented analysts. Think of it like this. Imagine a train departing from the station, slowly at first, then gradually building momentum until it's moving at full speed. The gamblers are those frantically trying to jump aboard while the train is still in the station, risking everything to say they got the best possible entry, or those attempting to leap off at the final destination, often miscalculating and getting hurt in the process. The true wealth builders? They're patiently waiting on the platform, watching for clear signs that the train is definitely moving in their anticipated direction. Then, when the momentum is undeniable, but there's still plenty of track ahead, they calmly step aboard and enjoy the journey. They're capturing what I call the fat, juicy middle of the move, where the risk is lower and the profit potential remains substantial. This mindset transformation alone can revolutionize your results. It removes the pressure of needing to be perfect with your timing and replaces it with a focus on recognizing established momentum. The beautiful paradox here is that by giving up the dream of perfect entries and exits, you actually increase your probability of substantial profits. But there's another layer to this journey that we need to explore. Even when you've developed the discipline to target the middle of trends, you'll never escape the fundamental truth that markets deal in probabilities, not certainties. This is where your decision-making process needs refined intuition. The market whispers its intentions through subtle signals: increasing volume, changing volatility patterns, shifts in leadership sectors, institutional money flows. These are the breadcrumbs leading to potential opportunities. But they're never promises, only possibilities. The masters of this craft don't wait for absolute confirmation before acting. By then, the move is often half complete, with the easiest profits already captured by those who moved earlier. There's a delicate balance here between impulsiveness and paralysis. Wait too long for complete clarity, and you'll forever be chasing markets that have already made their significant moves. Act too rashly on insufficient evidence, and you'll find yourself caught in false breakouts and whipsaws. Finding your personal equilibrium point between these extremes is part of your unique trading evolution. What I've discovered through years of observation is that successful operators develop a sixth sense, an almost intuitive feel for when the probabilities have shifted meaningfully in their favor. They've trained themselves to recognize patterns that others miss, not because they're seeing different information, but because they're processing the same information differently. Ready to transform your approach to market trends? Subscribe to join thousands of traders who've stopped chasing noise and started catching real moves. Every video builds on these core principles. Now, I want to examine how this intuitive recognition develops and why the ability to act decisively when signals appear separates the consistently profitable from the perpetually frustrated. If you've ever experienced that moment of recognition where you saw a setup forming but hesitated to act, type "I saw it coming" in the comments below. This brings us to perhaps the most counterintuitive revelation in all of market speculation. The real money isn't made from the active parts of trading, the buying and selling. The wealth is created during the waiting. This insight completely transformed my approach when I finally internalized it. Most people enter this arena believing that success comes from clever entry points or perfectly timed exits. They're constantly searching for that magical indicator or secret pattern that will give them the edge. But behind the scenes of every great market fortune is a much simpler truth. The operators who accumulated vast wealth were those who could sit still once they had identified a powerful trend. Think about that for a moment. The hardest work in speculation isn't analyzing charts or reading financial statements. It's having the emotional resilience to hold your position while the market validates your thesis. It's about cultivating patience, not cleverness. This mindset shift explains why some traders with modest analytical skills outperform brilliant analysts who can't control their impulse to constantly trade. I remember watching a position grow by 30%, feeling that surge of validation and the immediate urge to lock in profits. But the underlying trend was still intact. All the signals that put me in the trade were still present. The hardest thing I ever learned to do was nothing, to sit on my hands and let the position continue working. That single decision ultimately led to a 300% gain instead of a 30% one. The journey toward mastering this discipline is made even more challenging by another fundamental market truth. Prices never move in straight lines. The path of a trend resembles a staircase, not an elevator, advances, pullbacks, and advances again. These natural fluctuations serve an essential purpose in market ecology. They shake out the timid traders who mistake healthy corrections for genuine reversals. It's during these inevitable pullbacks that most people abandon ship, surrendering their positions to those with deeper understanding and stronger conviction. The psychological impact of watching your position move against you, even temporarily, can trigger primal fear responses that override rational decision-making. That's precisely why most traders never capture significant trends. They simply can't withstand the emotional turbulence. Developing the discernment to distinguish between a normal retracement and an actual trend change is perhaps the most valuable skill you can cultivate. It's not just about technical patterns or percentage moves. It's about understanding the character of the trend itself. Is volume declining during pullbacks? Are support levels holding? Is the fundamental story still intact? These nuanced observations separate those who ride trends to their natural conclusion from those who get shaken out prematurely. Now I want to explore why our natural human psychology works directly against us in these critical moments, and how you can rewire your decision-making process to align with market realities rather than emotional impulses. If you've ever sold a position during a pullback only to watch it resume its uptrend without you, type "left too soon" in the comments. You're definitely not alone in that experience. One of the most liberating revelations I've experienced in my market journey is understanding that you don't need to catch every move to be wildly successful. In fact, the relentless pursuit of every market opportunity is precisely what keeps most traders trapped in mediocrity. The truth is, just one or two significant trends per year, properly identified and ridden to their conclusion, can make your entire fortune. This insight goes against everything the modern trading culture promotes. We're bombarded with notifications, breaking news alerts, and can't-miss setups that create a constant fear of missing out. This environmental pressure pushes many into a scattered approach, spreading their capital and attention too thin across dozens of marginal opportunities rather than concentrating their resources on the truly exceptional ones. Think about the consequences of this mindset shift. Instead of frantically jumping from one trade to another, what if you developed the patience and discernment to wait for those rare, perfect setups? The ones where multiple factors align: technical patterns, fundamental catalysts, institutional interest, and sector momentum, all pointing in the same direction. These convergences don't happen every day, but when they do, they often signal the beginning of those massive, wealth-creating moves. It's like a treasure hunter who understands that digging hundreds of shallow holes will never be as productive as digging deeply in the few locations where all the clues suggest buried treasure. Your time, energy, and capital are precious resources. Allocate them where the potential reward justifies the effort. This approach also removes an enormous psychological burden. You're no longer pressured to have an opinion on everything or to be in the market at all times. The freedom to wait, to stand aside when conditions aren't ideal, is incredibly powerful. It keeps your powder dry for when it really matters. And here's another transformative truth that few ever internalize. You can be wrong half the time and still accumulate substantial wealth. Success in the markets doesn't require perfection. It requires discipline. By keeping your losses small and letting your winners run to their full potential, the mathematics of speculation work decidedly in your favor. This principle fundamentally changes your relationship with being wrong. Most people approach trading with the flawed expectation that they need to be right on nearly every trade. This creates unbearable pressure and leads to devastating emotional responses when inevitable losses occur. But what if being wrong isn't the problem? What if the real problem is how you respond when you're wrong? The essence of this wealth-building formula is beautifully simple. Cut losses short, let profits run. When you're wrong, acknowledge it quickly, exit with a small loss, and preserve your capital for the next opportunity. When you're right, have the courage to stay with the position as it develops into a significant trend. This balance, this discipline, is what separates consistent winners from perpetual strugglers. Behind the scenes of every great market fortune is this same pattern, a handful of substantial winners that far outweighed numerous small losses. It's not about win rate. It's about the relationship between your average win and your average loss. When that ratio tilts dramatically in your favor, even a modest percentage of winning trades can generate extraordinary returns. Let me know if you're starting to see the markets differently by typing "quality over quantity" in the comments. I'm curious how many of you resonate with this approach that contradicts so much of the conventional trading wisdom. Now let's examine one of the most profound challenges in this journey: the uncomfortable truth that our own human nature actively works against our success in markets. This internal struggle creates a fascinating paradox that explains why so many intelligent, hard-working people still fail to capture significant trends. Our evolutionary programming, the very instincts that helped our ancestors survive, becomes our greatest liability when applied to market speculation. Think about it. We're naturally wired to run toward what feels good and away from what feels painful. But in markets, this instinct consistently leads us astray. We become greedy precisely when we should be cautious and fearful, exactly when we should be bold. The psychological blueprint is almost universal. When prices are rising and everyone's making money, our greed intensifies. We buy more, take larger positions, and throw caution to the wind, right at the moment when risk is highest. Conversely, when markets are plunging and genuine bargains appear, our fear paralyzes us. We can't bring ourselves to buy what others are desperately selling, even though this is exactly when the greatest opportunities emerge. Perhaps the most damaging manifestation of this flawed wiring is how we handle winners versus losers. We instinctively sell our profitable positions too soon, eager to lock in gains, and avoid the pain of watching profits evaporate. Yet with losing positions, we hold on stubbornly, hoping they'll recover and spare us the emotional sting of admitting we were wrong. This deadly combination, cutting winners short while letting losers run, is the perfect recipe for mediocrity or worse. The revolutionary insight here is that simply reversing these natural tendencies, holding winners longer and cutting losers quickly, immediately puts you ahead of 90% of market participants. It's not about having better information or more sophisticated analysis. It's about having the self-awareness to recognize your destructive instincts and the discipline to act contrary to them when necessary. This brings us to another critical revelation in understanding market movements. Trends aren't random accidents. They're born from specific conditions and forces that build over time. Price doesn't move without cause. Behind every significant trend are fundamental drivers, changes in earnings, trajectories, shifts in supply and demand dynamics, alterations in monetary policy, or waves of institutional capital deployment. The price action itself tells this story to those who know how to interpret it. Volume patterns, momentum characteristics, volatility signatures. These aren't just technical curiosities. They're the market's way of revealing the underlying forces at work. While opinions and predictions fluctuate wildly, the tape itself never lies. It shows exactly what's happening in the battle between buyers and sellers, without bias or commentary. This mindset transformation, viewing price movements as reflections of real underlying conditions rather than random noise, gives you tremendous clarity about when to act and when to stand aside. You begin to recognize the footprints of institutional accumulation before a major uptrend, or the telltale signs of distribution before a significant decline. If you've noticed yourself fighting against your own psychology in your market decisions, type "rewiring my instincts" in the comments. It's the first step in acknowledging this critical battle that happens within every trader. Now let's explore a critical element of success that separates the professionals from the amateurs, the discipline of having a clear, defined plan before you ever enter a position. This strategic foundation is often overlooked in the excitement of spotting what seems like a promising opportunity. But the hidden truth is that most traders fail not because their analysis was wrong, but because they operate on feelings rather than rules. Think about your own experience for a moment. How many times have you entered a trade with a vague sense of "this looks good," but without any concrete parameters for how you'll manage it? Without predetermined exits for both profit and loss? Without a plan for what you'll do if the market moves sideways instead of in your anticipated direction? This ambiguity creates a psychological vulnerability that the market inevitably exploits. The transformation begins when you establish these boundaries before putting capital at risk. Knowing exactly how you'll act if you're right, and perhaps more importantly, how you'll act if you're wrong, creates a decision framework that protects you from your worst emotional impulses. It's like having a map and compass before entering unknown territory, rather than wandering aimlessly and hoping for the best. This preparedness doesn't just impact your results, it fundamentally changes your relationship with the market. When you have clear rules, the emotional turbulence of price fluctuations becomes significantly less disruptive. You're no longer making stressful decisions in the heat of the moment when judgment is most compromised. Instead, you're simply executing a predetermined plan with clarity and confidence. But here's where the journey takes its most challenging turn. Even with the perfect plan and impeccable analysis, you'll encounter what I consider the ultimate test in capturing significant trends. The hardest thing in trading isn't the thinking part, the research, the analysis, the planning, it's the sitting. This revelation completely reoriented my understanding of what creates market success. After you've taken your position, the real battle begins. The market will test your conviction in countless ways. News headlines will question your thesis. Well-meaning friends will share contrary opinions. Price will fluctuate erratically, sometimes moving sharply against you before resuming the main trend. Each of these moments creates the temptation to abandon your position prematurely, to doubt yourself, to second-guess what initially seemed so clear. The psychological impact of this noise can't be overstated. Your mind becomes a battlefield between conviction and doubt, between patience and fear. Most traders ultimately surrender to this internal pressure. They literally talk themselves out of their best positions. They allow temporary market noise to override their carefully constructed thesis, and in doing so, miss the very trends they correctly identified. Developing the resilience to sit through this noise, to ignore gossip, to maintain conviction when others are losing faith. This is the rare discipline that separates those who consistently capture major trends from those who merely identify them but fail to profit. It requires a certain philosophical detachment from short-term market movements and a deep trust in your methodology. What strikes me as particularly fascinating is how this capacity for patient sitting, for disciplined inaction, runs contrary to our culture's emphasis on constant activity and intervention. We've been conditioned to believe that success comes from doing more, but in the market's domain, it often comes from doing less once you're correctly positioned. If you recognize that some of your best trade ideas were abandoned too soon because of this sitting challenge, type hardest. Part is sitting still in the comments. I'd love to know how many of you have experienced this crucial test of market discipline. Let's explore another crucial truth about capturing major market trends, one that might fundamentally challenge how you've been approaching opportunities. The reality is that significant wealth-creating trends rarely come from following the crowd. By the time the majority recognizes a trend, acknowledges it, and feels comfortable participating, the most profitable portion of the move has typically already occurred. This creates one of the great paradoxes in market speculation. To catch these powerful trends near their beginning, you must be willing to act when it feels uncomfortable. When your judgment and analysis diverge from popular opinion, consider the psychological weight of this requirement. You're essentially placing your capital at risk based on a conviction that runs contrary to what most market participants currently believe. That takes tremendous courage and clarity of thought. Behind every major market trend is a period of disbelief when the emerging move is dismissed, rationalized away, or simply ignored by the majority. This is precisely when the foundation for enormous profits is laid. Those who can recognize the early signals and act decisively, despite the lack of social validation, position themselves to capture the full evolution of the trend. This willingness to be temporarily alone in your market view isn't about being contrarian for its own sake. It's about developing the independence of thought, to see what others don't yet see, to interpret market signals without the distorting filter of collective opinion. When you learn to trust your own analysis and act on it, even when it feels isolating, you gain access to opportunities that the crowd followers never experience. The journey of independence comes with an additional revelation that fundamentally reframes how we understand market success. Here's the uncomfortable truth. The market itself isn't what ruins most traders. Their own fear, greed, and impatience do. This insight shifts the entire focus of mastery from external factors to internal ones. Think about this profound perspective shift. Most people spend years trying to perfect their technical analysis, studying complex indicators, or searching for the perfect trading system. They're convinced that if they just find the right external approach, success will follow. But the hidden reality is that no system, no matter how sophisticated, can overcome poor emotional control. Mastering yourself is infinitely more important than mastering market analysis. The most elegant strategy in the world fails in the hands of someone who can't control their impulses or manage their emotional responses to market movements. This isn't just theory. It's the lived experience of countless traders who had all the knowledge they needed but couldn't translate it into consistent profits because of psychological barriers. Trading discipline, emotional control, and the ability to act on what the tape actually shows rather than what your emotions want it to show. These are the true keys to sustainable success. They're also the hardest skills to develop because they require honest self-examination and a willingness to confront your own weaknesses. The breakthrough comes when you recognize that your market results are ultimately a reflection of your internal state. Every impulsive entry, every premature exit, every ignored stop-loss, these aren't market problems, they're self-regulation problems. When you shift your focus to developing this inner mastery, your outer results begin to transform in ways that no technical indicator could ever achieve. If you're beginning to understand that your greatest market battles are fought within rather than on the charts, type "inner game matters most" in the comments. I'm curious how many of you have reached this critical insight on your trading journey as we wrap up today's exploration of what it truly takes to catch those life-changing market trends. I hope you're walking away with a fundamental shift in how you approach your trading journey. Remember, this isn't about perfection. It's about patience, discipline, and the courage to act differently than the crowd when your analysis suggests a major move is forming. I created this channel precisely to share these deeper market insights that go beyond the typical technical analysis you'll find elsewhere. If you found value in these ideas about patience, trend recognition, and psychological mastery, I'd love to have you join our community of thoughtful traders by hitting the subscribe button below. The conversations we have in the comments section often reveal even more insights than the videos themselves. If something in today's message resonated with you personally, drop a comment with "catching the big swing" so I know you made it to the end. Your experiences and perspectives help enrich our collective understanding. If you found these ideas valuable, a simple like on this video helps others discover this content too. It's a small action that helps grow our community of traders focused on catching meaningful trends rather than chasing market noise. Right beside this video, you'll find our exploration of how to properly size your positions when you do identify these major trends, because finding the move is only half the battle. Click on that video when you're ready to dive deeper into maximizing your returns while managing risk effectively. The principles we've discussed today lay the groundwork for what we'll explore there. Until next time, remember that the market rewards patience far more generously than it rewards activity. I'll see you in the next video.